Hi, I'm Helen Forster and this is a debrief of Question 1 Dunstar Limited from the ATX mock exam. This was the 50-mark Section A question, and what I want to do is to show you how best to approach this question and present your answer, the marks that would be awarded, and particularly where some of the easier marks were, and how to pass this question. And this was a fairly typical Section A question, with the overview on the main screen, which just gives you an indication of the different areas covered. And I would always start by looking at the work to be carried out, where you'll find the detailed requirements and a breakdown of the marks. And the best way to approach this is to treat it as lots of short questions. You don't have to do the parts in the order that they're set out here, although when you present your answer, because it's easy to move things around, I would present it in the order that it is here. But if you wanted to, say, start with the ethics part because that's easy, then you could do that. I'm going to start from the beginning for the purposes of this debrief. And the first requirement is just a short 3-mark section on the purchase of capital items, and it refers you to Exhibit 1, so it will always tell you which exhibit or exhibits to use for this big question. The other thing to note as well is the format. Part A requires notes for a meeting. So notes for a meeting, you just need to make sure that you do use the correct format. That's something that they will be looking for the professional skills marks. We have communication professional skills marks in question 1, and so that's something that you need to make sure that you do. I would always start my answer in the word processor. If I use numbers, then cross-reference to the spreadsheet, but usually most of the answer is going to be in the word processor. And remember that you can move the windows around as well. Let's just pop the requirements up on the left-hand side here. Set up the notes. And for meeting notes, they're not going to be strict. There's no set format. The main thing is that you identify that you are writing notes for a meeting. So that's more what they're going to be concerned about in the exam. So have you attempted to present in the right sort of format and use headings? Make sure that your answer is nice and clear and easy to follow. And this first requirement is to explain the corporation tax deductions for the purchase of capital items, and then comment on the validity of the advice received from Patrice's university friend. Now, usually the advice is going to be wrong, and there will be a scepticism professional skills mark for questioning the advice. Even if the advice isn't wrong, there is definitely going to be some sort of scepticism mark for considering that. Look at the number of marks available as well before you start. We've got just 3 marks here. So in the exam, there are 80 technical marks, and then you've got your 20 professional skills marks. And if you allocate the time based on the technical marks, you pick up the professional skills marks as you go along. You've got 3 hours, 15 minutes, so I would be using 15 minutes for reading, tidying up, deciding which question to do first, and then that means you've got 3 hours to score your 80 technical marks, and that gives you 2.25 minutes per mark. So if you work out your time, you shouldn't be spending longer than 6 to 7 minutes on this section. And for 3 marks, it's usually going to be 1 mark per good relevant point. So we want to try to have 3 good relevant points in the answer. And then if we look for the information in Exhibit 1, so this is towards the end of Exhibit 1. Exhibit 1 was quite a long exhibit, and we've got the capital asset purchases, and there are 3 different assets. So 3 marks, 3 different assets, and I would be then setting up a heading for each of these. And then we've got a little bit more information over the page. The goodwill is going to be amortised over a 10-year period, whereas the trademark is not going to be amortised. You need to think about the relevance of that, thinking about intangibles. How do we get tax relief for intangibles? The building is 20 years old. Not immediately obvious why they've told you that, but that was actually just to say that it's not a newly constructed building, which means that it's not going to qualify for structures and buildings allowances. And then the other bit of information, the advice from the friend, has said that it's possible to claim the annual investment allowance in respect of the office building. So that's what we need to think, is that true or not? So here's my answer for this part of the question. I've tried to show you the marks available, so I've illustrated the easy marks with green, the doable but not quite so easy marks in yellow here, and then the professional skills marks I've put in this nice turquoise colour. So we have the goodwill, and goodwill, unfortunately, we get no deduction. There are no capital allowances on goodwill, we cannot claim that cost, so as long as you've learnt that, that should be a nice easy mark. For the registered trademark, intangible assets, we usually follow the accounts, but remember that for that trademark, it said that no amortisation is being deducted. So that would normally mean no deductions in our tax computation. But for the trademark, for other intangibles, we can elect to claim a 4% writing down allowance. So that would be a deduction of £1,200 a year for another mark. Then we've got the office building. So the office building, the friend is wrong. We cannot claim the annual investment allowance. The only allowances we might get for the building itself would be structures and buildings allowances, which, as we've said, are not available here. We've got a scepticism professional skills mark as well for demonstrating the ability to challenge that advice. So if you've questioned that advice, then you've got the skills mark. They didn't actually give you an extra mark for stating that there would be no structures and buildings allowances, but they did give a half mark in this one if you've pointed out that there might be AIA for plant and machinery within the building. So that could apply to things like integral features, depending on whether or not the AIA had already been used within the group. So this is if we form a group, which is one of the other things we need to consider. And for that statement, we've got two professional skills marks. There's one if you've recognised that the building might include plant and machinery. And then there's a scepticism mark, which is for recognising that we don't know whether the AIA has been used within the group. So those, I think, were less obvious points. But even if you didn't get those, for the technical marks, there are 4.5 marks available, a maximum of 3. You couldn't score more than the maximum. And although you don't need to pass each part of the question, you are aiming for 50% at least to score a pass. So if you manage to get 1.5 of those technical marks, so looking back, if you've said there's no deduction for goodwill and you can't claim the AIA on the office, you've got 2 marks. So then you're on course for a pass already. And that's without considering the professional skills marks as well. So hopefully quite straightforwards, but only 3 marks. So the danger is that you spend too much time there. The second part is the largest part of the whole question. So this covers loss relief and rollover relief for 15 marks in total. Now the problem here is that it doesn't say how many marks there are for each bit of this. You will need to think about that. And just as a rough guide, you maybe say, well, half the marks for the loss relief, half the marks for the rollover relief. As long as you don't spend more than 15 marks worth of time in total. And for the first part, we are explaining, so a written section, the extent to which the trading loss of Dunstar Limited is going to be available for Aberd Limited, Boffer Limited and Mr. Blaine under each of 3 structures. So we need to have a look at what those structures are, have a look at the information, and this one does refer us to Exhibit 1 and Exhibit 2. And in Exhibit 1, we have details about the ownership structures. So we've got 3 alternative ownership structures, X, Y, and Z. We need to think about each of those. And then down at the bottom, the budgeted results of Dunstar, it just says that it's budgeted to make a tax-adjusted trading loss. So there are no numbers here. It's purely written, and we need to think about whether the loss of Dunstar can be used by the 2 other companies and Mr. Blaine for each of these structures. So I would be setting up some headings: consideration of the alternative ownership structures, general comment about loss relief, and then structure X, structure Y, and structure Z. So the first point I would be making is that we've got a loss in a company. We cannot surrender losses made by a company to individuals. And that would be a nice easy mark if you've spotted that. So Mr. Blaine is not a company, and so he couldn't claim relief under any of those structures. And you don't necessarily have to do this in the same order, but there's 1 mark for recognising that. And then I would go through each of these 3 structures, but before we do that, let's just have a think about that first one, structure X. So we've got the shareholdings. Just drawing a little diagram here. A owns 80%, B owns 10%, and Mr. Blaine owns 10%. So in this structure, structure X, we've actually got 1 company with an 80% share, and that means that A and D will form a 75% losses group. And within a 75% losses group, the losses in Dunstar can be surrendered against the profits in Abaird Limited. So that's what we need to make sure that we write about in the answer. A mark for recognising that A and D would form a 75% losses group. How much loss could be transferred? So these are maybe the less obvious points. All of the loss would be available. So within a group relief group, it doesn't matter whether you've got 75% or 80% or 100%, you can transfer as much loss as you like. Going back to the requirement, you might have forgotten to mention that the other company, so we've mentioned Mr. Blaine, but the other company, Boffa, is not part of the group, so they would not be able to claim relief. So just make sure that where you have got a requirement like this, where you're stating the extent to which each of these companies can use the loss, make sure that you state where there is one that can't use the loss. Structure Y. A has 65% and Mr. Blaine has 35%. Clearly here there is no 75% group, and it is tempting to think that this might be a consortium. So a consortium is where we don't have a single company with 75%, but we have a joint share of at least 75%. But unfortunately, you cannot form a consortium with a person. So for this one, sadly, there are no loss relief groups. A and B own less than 75%. No consortium because an individual can't form a consortium. Half for each of those points. And so applying that means that there would be no available relief for Abaird or Boffa. Structure Z. Very similar, except this time we have the shares 70% owned by A, 30% by Boffa. And this time, both of our shareholders are companies. So we've got 2 companies jointly holding at least 75%, each with at least 5% of the shares. So this is a consortium. Now, where we have a consortium, we can claim relief, but this time the relief is going to be based on the percentages. So within a consortium, the percentage matters, and we apply the percentage to whatever's in the consortium company. So that will be the loss. Worth stating why it's a consortium. So this is as 75% of the shares at least held by companies, each with at least 5% for a mark, and they could claim relief based on the percentages. So A could claim a maximum of 70% of Dunstar's loss, and BOFA could claim a maximum of 30%. We also have a professional skills mark for analysis and evaluation if you've recognised that the consortium was relevant here. So looking back at the requirement, we've now answered the first part. We have explained the extent to which the trading loss of Dunstar is available for Aberd, BOFA and Mr. Blaine for each of those structures. As you go through, keep looking back, make sure that you have answered the full requirement. And then the second requirement, or the second part of this requirement, is all about rollover relief. Again, we've got some words. We're explaining whether or not Aberd will be able to roll over the gains for each of its building sales against the office to be purchased by Dunstar, and then explaining with calculations which of the gains should be relieved to get the maximum benefit. And if we have a look at the information for this one, in Exhibit 2, we have a schedule of Aberd's chargeable gains. So we've got 3 buildings that have always been used in the trade. So those are all going to be qualifying assets for rollover relief. We've got details of the gains, the proceeds, and the dates of disposal. The key for rollover relief then, we've got qualifying assets, but to get rollover relief, we need to reinvest the proceeds. So those will be the important figures. And we also need to think about the dates. So remember that there is a time limit for reinvestment. And those are the buildings that are being sold. The asset that's being purchased is actually back in Exhibit 1. And that is this office building that Dunstar is buying. So Dunstar is purchasing on the 1st of April 2026 a building for £270,000. So the first thing that we need to just consider is that we've got Aberd selling the buildings, Dunstar buying a building. They can only get rollover relief if they're part of a gains group. So a little bit of a higher skills point. Thinking back to the first part, we've got those 3 structures, which is to set up Dunstar. And in fact, it's only structure X where we have Aberd actually holding at least 75%, which is what you would need as a direct share to form a gains group. So it would have to be structure X for there to be any rollover relief. Going back to the information then about the buildings, the other thing to note is the date. You need to make sure that you learn the rules for rollover relief. This does get tested very frequently in the exam. And we have to reinvest our proceeds within the 12 months before the disposal through to the 3 years after. So the reinvestment here is occurring on the 1st of April 2026. The Quens building, we've got sale on the 1st of October 26. So April 26 is within the 12 months before that. The Roon building, 1st of February 27. So again, that purchase is within the 12 months before that. But unfortunately, the third building, which is sold on the 1st of July 27, so we'd have to purchase within 12 months before the 1st of July 27. So that would have to be 1st of July 26 onwards. So unfortunately, we can't roll over the gain on that building. So it's only 2 buildings where we can possibly roll over the gains. And the other thing to note as well, which is in the information in Exhibit 1, we're told that Dunstar is only going to use 2/3 of the building as its headquarters, and the rest is going to be rented out. Now, for rollover relief, the asset has to be used in the trade. Only 2/3 of this asset is going to be used in the trade, which means, unfortunately, that going back to that cost, only 2/3 of the cost will qualify. So 2/3 of 270,000 is the amount that's being reinvested in a qualifying asset. So going back to the proceeds that we've got, the Quens building is sold for 280, so we're spending 2/3 of 270, it's clear that we're not reinvesting all of the proceeds, and the Roon building is sold for 340, so again, we've only got partial reinvestment here. So those are all the points that we need to consider when we put together our answer. So I've headed it up, rollover relief, and then first point, only available if they are a 75% gains group for a mark. So that means we have to follow structure X. And so there's 1 mark for recognising the gains group, and then the professional skills mark is for applying that and saying that we have to go with structure X. So we can't do this if we went for structure Y or Z. The buildings will qualify, and for rollover relief, our new qualifying business asset has to be purchased within the 12 months before the sale through to the 3 years after. That's just a nice easy mark for one of the conditions for rollover relief. And then for applying that, it's just going to be the Quens building and the Roon building that qualify. We have another mark. So that mark, slightly trickier, but most of the marks in the exam are going to be for application of the rules. Then we have a couple of marks for recognising that only 2/3 of the new building will qualify. And you might have done this as part of your calculations, but that means that in terms of a cost, the qualifying investment is only going to be £180,000. And so we've got partial reinvestment. And for partial reinvestment for rollover relief, very, very common in the exam, it's going to be the lower of the gain or the proceeds that have not been reinvested that will be chargeable straight away. And this is where I would do the calculations in the spreadsheet. So you could insert a table and do them here, or you can do your calculations in the spreadsheet. So I've chosen to use the spreadsheet just because it's nice and easy, and you can use formulae for any calculations as well. So I've listed out, we've got the 2 buildings that will qualify, the Quens building and the Roon building. We've got the gains from the question, the proceeds spent. So this is the 180,000 that we've had the mark for already. That's the qualifying proceeds. And then the proceeds not reinvested is just the difference between those two. So the idea is that you can roll over part of the gain if you've reinvested part of the proceeds, but you have to leave a gain equal to the proceeds that you've kept. So for the Quens building, the chargeable gain will be 100,000, the proceeds not reinvested, and we can roll over 50,000, the balance of that £150,000 gain. For the Roon building, the proceeds not reinvested are actually more than the gain, so that just means that the total gain would be chargeable and there is no rollover relief. So 1 mark for applying that. 2 marks in total. And we've also got an analysis and evaluation professional skills mark if you've used the information to prepare suitable calculations. So if you've had a go, even if you've got the answer wrong, if you've worked out how much rollover relief can be claimed and the amount of gain that will be chargeable straight away, then any attempt at that would get the professional skills mark. So sometimes people make the common mistake of rolling over a proportion of the gain, which is wrong, but that would still get the professional skills mark. And going back to our word processor then, the question was which building should be sold to get the maximum rollover relief, and the maximum rollover relief, it's going to be the Quens building. So we've done the calculations and I've just cross-referenced and said see Excel to make the marker's life easier. And then finally, we have a professional skills mark for analysis and evaluation if you've used relevant information to determine the availability and best use. So if you've actually used the information in the question and if you've come to a conclusion that's consistent with your answer, you should be awarded that professional skills mark. So altogether, we have 16.5 marks in total for this part of the question, maximum 15, and to be on course for a pass, you just need to get 7.5 of those marks. So hopefully that was possible.